Insurance companies are quietly charging many customers more than they need to pay, and the loopholes that can cut premiums in half are buried inside policies most agents will never bring up unless you ask by name. If you pay for auto, home, or renter's insurance, this matters to you. Stay with me because we will uncover 6 simple loopholes that often lower bills by 30 to 50%. Your insurer may be charging you more than necessary, and you can change that with a few targeted moves. Loophole number 4 is the loyalty penalty almost nobody knows about. It is a big reveal, and we will get to it soon. These strategies are already baked into many policies. The catch is that most agents will not mention them unless you ask for them by name. Before we start, please subscribe because new bill cutting and money-saving breakdowns publish every single day. I will guide you step by step in plain English and give you the exact words to use with an agent. Loophole 1 is the affiliation, also called the group discount. It is simple, and many people qualify but never claim it. Insurers offer discounts through employers, alumni associations, unions, and membership organizations. The problem is it is rarely front and center. It hides in fine print or requires a special code. Use a 3-step check to unlock it. First, check your employer benefits page for employee perks, insurance discounts, or affinity programs. Second, call your agent and ask, "Do you offer any employer or affiliation discounts for my company or any groups I belong to?" Be ready to name your employer, your university, and any professional associations. Third, if you qualify, ask for the exact discount percentage and the code to apply it. This single call can deliver real savings, often stacking with other discounts. For many drivers, that is $100 to $200 or more per year on auto alone. Insurers will not chase you to apply it. You must bring it up. This is your easy first win. Take a few minutes today and claim the benefit you already earned. Loophole 2 is the credit score connection. Many states allow credit-based insurance scores that influence price. It is not the same score lenders use, but it is related, and it can move your premium a lot. Insurers assume strong financial habits correlate with lower risk, so a better score can mean a lower price. Step 1. Check your credit reports from the 3 main bureaus using the official government-authorized website. Step 2. Review for mistakes and dispute any errors immediately. Step 3. If balances are high, make a plan to reduce them, even gradually. After improving or confirming your standing, call your agent and ask, "Do you use credit-based insurance scores in my state, and what pricing tier am I in?" If your credit has improved since you started your policy, request a rerun. It can lead to instant savings. Moving from good to excellent can save hundreds per year across auto and home. This is a quiet lever with a big impact. Protect your credit and your premiums. Quick reminder, subscribe so you do not miss the comparison shopping move that saves an average of $400 a year. Daily breakdowns help you keep more of your money where it belongs, your pocket. Next up, the policy review timing window that gets the best rate. Loophole 3 is timing. Rates move with markets, company performance, and underwriting shifts. There is a sweet spot just before renewal, and when broader rate changes roll out. Acting inside that window can drop the price for the same coverage. Shop about 3 to 6 weeks before your policy expires. That is when new discounts and promotional pricing often appear. When you call, ask for a rate reset or a renewal rate review. Those terms signal you want fresh pricing. Say, "I am approaching my renewal date, and I would like you to please run a renewal rate review and apply any new customer promotions I might qualify for." Many people save 10 to 20% by making this call at the right time. Do not let auto-renew roll without a quick review. Insurers bring their best offers when a customer might switch. Put yourself in that moment. You are signaling that you are engaged and price-aware, which encourages them to find savings to keep you. A passive renewal is how money leaks out year after year. Let us slow down. This is the payoff from the opening, the loyalty penalty. Many insurers charge longtime customers more than new customers for the same coverage. Software detects who is unlikely to shop, then raises those prices gradually. Meanwhile, they tempt new shoppers with lower entry prices. Step 1. See what new customers pay. Use comparison tools or call a few carriers as if you were brand new. Get a new customer quote from your own company too. If the new customer price beats your renewal, you have identified the loyalty penalty. Call your agent and ask for a new customer match or a retention review. Say, "I really like my coverage with you, but I received a significantly lower quote. Can you please run a retention review and see if you can match or beat it?" That language signals you might leave and often routes you to specialists with extra discounts. People who switch save a median of roughly $400 per year, and many save more. Even if you prefer not to switch, a polite threat to leave can unlock a retention discount. Do not let loyalty become a surcharge. Ask for the price you deserve. You have learned 4 powerful ways to cut insurance bills, and the loyalty penalty shows how much money is on the table. Comparison shoppers save about $400 a year on average. Subscribe now so you do not miss the comparison step-by-step and other daily money savers. Next, we will flip common assumptions about deductibles, then finish with the 10-minute comparison move. Our goal is clarity and confidence, so you always know exactly what to ask. Ready for the math that actually saves you money? Let us dial in your deductible the smart way. Loophole 5 involves your deductible, and it flips the assumption that higher always saves more. Sometimes a big deductible increase barely moves the premium. You need the actual numbers. Ask your agent for a table showing premiums at different deductibles: $250, $500, $1,000, and so on. Study the dollar difference in the premium between each step. Translate any monthly savings into a yearly figure. Example: if raising a $500 deductible to $1,000 saves $15 a month, that is $180 a year. You would take on an extra $500 of risk. It would take nearly 3 years without a claim to break even on that move. Often, the sweet spot is moving from very low to standard, say $250 to $500, then stopping if later steps barely save anything. A smart deductible choice can trim 10 to 20% while keeping risk comfortable. Loophole 6 is the 10-minute comparison shop. Prices for the same coverage can differ by hundreds, even thousands. Letting policies auto-renew is how the loyalty penalty sticks. First, use 2 or 3 comparison sites to scan the market fast. Second, call 1 or 2 local agents who access regional carriers. Have your current policy info ready: policy number, vehicle identification number, and coverage details. Compare apples to apples. Match deductibles and limits, and focus on the total annual cost. Ask for a bundle quote if you hold home and auto with the same carrier. Bundling can save up to 25%. On average, comparison shoppers save about $400 per year. Some save much more. Put a recurring reminder about a month before renewal each year. This 10-minute habit is the best defense against overpaying and the loyalty penalty. With 6 loopholes in hand, you are ready to negotiate from strength. Now, the exact phrase that sparks an immediate rate review. You do not need to be forceful. Be clear and direct. Say, "I have a lower quote from another company. Can you run a retention review and match or beat their price?" Then pause. Let the agent respond and ask for details. Your 6-step plan: 1. Ask for affiliation or group discounts. 2. Fix credit report errors and request a new tier. 3. Shop 3 to 6 weeks before renewal and request a renewal rate review. 4. Never accept the loyalty penalty. Compare new customer pricing. 5. Use smart deductible math to find your sweet spot. 6. Spend 10 minutes each year comparison shopping. Use the magic phrase to trigger immediate review when you are ready to negotiate. At about 12 minutes in, please subscribe and drop a comment with how much you saved on your premium. Your story helps others. Sharing your savings motivates the whole community to take action. This essay is educational. Policies, rates, discounts, and rules vary by company and by state. Discuss your specifics with a qualified, licensed insurance professional before making decisions.